Investors and traders, welcome to the channel. Market chart pattern today is 20th of May 2024. Hope everyone is having a great day. We will be taking a look at the key US stocks, technology stocks in particular for this video segment. As always, this video is for educational purposes only and is not a financial advice. So we'll start by taking a look at the weekly chart of Google. Google has been in this really nice ABCD formation, and it's been actually quite some time since we actually looked at this one. But it's really interesting to see that it's just in this ABCD pattern, which is pretty much complete around here. But we do have 1.618 expansion a little bit higher. So anywhere between 170 to 194 or roughly 200 is the kind of target region, and then we could see some sort of pullback. But the stock is looking good. Momentum is positive. Price above 200, 20-week moving average is way above 200-week moving average, but it is also reaching these points where we need to be watching this, reaching our targets around $200 per share level. Quickly on the daily chart. On the daily chart, we had identified 170 as being a strong resistance level. The stock kind of fluctuated around it for quite a while, and now it's just moving up a little bit based on the weekly targets. Now, let's take a look at Apple. Here we go. So the Apple stock is really interesting. This is the weekly chart, of course. And here what we are looking at is that when the stock was hitting $163 per share level, this is where we were saying that, okay, this is the level that it should hold. Getting below 163, and even the 163 is drawn around here, would actually open up doors to $155 per share level. And ever since, we have seen a nice rally take place in the stock, going back 1, 2, 3, 4, and we are in the fifth week, so over 1 month now. And what is actually now possible is that we could be in an ABCD pattern higher, where we could see actually $220 per share level, roughly speaking, and maybe a little bit higher as well for the stock. But of course, it needs to get above the top of this range, which comes around the $200 per share level. Now, this $200 is a really strong resistance level, and you can see that for about a year, roughly, we're on July. It's just been in this trading range. It's a pretty wide trading range, and we have seen these double top formations here, but really it's a trading range, and the stock has done something like this previously as well. So you can see that topping beginning of January 2022. So basically, ever since this whole inflationary environment and the rise in interest rates actually started, we have seen the stock go into a trading range, and then it's when the inflationary pressure, or in other words, the expectation for the interest rates to go down increases, we have really seen investors come back and pile into this, and then it starts a trend. And now it is in this mode one more time, kind of very similar to what we saw here, in December of 2021 to December of 2022. So yeah, I mean, if the inflation outlook goes lower, and the expectation for a rate cut to come in by the Federal Reserve go up, we could really see a very nice move, the kind of move we have seen here, take place one more time, and I hope several times later on as well, but happen again. And that would, could be a pretty quick move, taking out the top of the range and going towards $220 per share level, in a rough estimation, and maybe a little bit higher. And one more time, I would like to reiterate for new subscribers, when this market was really in this range, which is a pretty wide range, $120, $128 to $120 is the level that we were really calling for a good bottom to come in. And the reason is the number of these Fibonacci ratios. They come together with the ABCD pattern, or the pattern went a little bit lower, but because of the confluence of such a number of these ratios coming together, was giving us the confidence to make this call that this region 120 to 128 is pretty strong support. Looking at this stock on the daily, we can see that a big gap up when the earnings came out, and they also announced buying about $110 billion worth of repurchase for the stock. So that's of course good for the shareholders. And then we have this expansion. We have already seen this on the weekly chart, so I'm not gonna draw it, but shorter term, this $200 per share level, this is what the stock needs to get above. But the momentum is actually improving. I think if the stock remains where it is, maybe a little bit higher, the 20 period moving average will get above the 200 period moving average, which is this red line. But the price is already above 200 period moving average, which is also a plus on the daily chart. So yeah, looks like Apple is the technicals are improving quite rapidly in the stock, so that looks good. Now let's take a look at Tesla. So the Tesla stock is range bound again. This is where the earnings came out. Um, Elon Musk did the conference call. He appeared to be in a good mood, and the to build lower price cars was reiterated. So I think that gave investors confidence that Tesla is moving in that direction to be able to compete with competitors coming out with cheaper cars. And ever since we have seen this stock actually not go down or not go down, in a quickly. And what it's doing is essentially it's in a trading range. Um, this 50% um, retracement is where around 168 169 where it is being held, and really clinging to this 20-day moving average, which is good from momentum perspective. And also this is something which shorter term traders like to take a look at, but it also remains below the 200 period moving average. So there is more work that the stock needs to do, and this is why we're really looking at $200 per share level, because that's the longer term 38.2% retracement. Once it is able to get above that, then I think we could be more confident in the sense that we might have seen a good bottom come in. But it's going to take some time for the stock to consolidate here and be able to take this out. On the flip side, if this low of 130 is taken to the downside, then it opens up the doors to about $115 per share level. Taking a look at this on the weekly chart, here we go. We can see this channel formation. It broke below that, then got back into it. This is the bearish symmetry concept here. So this is another reason that we would like to really see the stock get above the 200-day, $200 per share level, and then getting above this channel formation. That would be pretty nice. Then we could have an ABCD target higher as well. So just waiting to see how the stock is likely to perform. Now we will take a look at the chart of Microsoft. Okay, so Microsoft stock chart looks pretty strong. They are really into the throes of artificial intelligence, because they have shareholding with the OpenAI, so clever move there. But it is also right at the 433, which is the 1.618 expansion. So the stock has kind of stalled there. Essentially, just a trading range. Maybe there's going to be a bit more digestion here. It's going on for several weeks now, like 1, 2, 3, 4, fifth in the fifth week. Getting above this will set up for the targets to the upside. The ABCD goes a little bit higher to around 460. So really watching this carefully. But the stock looks good. Look, the 200 period moving average. The price is this is the weekly chart. So this is the 200 week moving average. The stock price is above that, and look where the 200 period weekly average is. Um, so there's a big gap in here that just shows the strength of the trend. So that's pretty good. And also something that I would like to show to you, this is the long term. This blue line you see is really a long term trend line which is in place. going back to 2018. And when the stock was falling, it came down and touched 215. That's where we were also making a call that we had this trend line here. We also had this really long term 38.2% retracement come in as well, which is giving us the confidence that the stock was likely to find pretty good support, and that turned out to be the case. Okay, now let's take a look at Amazon. Oh wow, so the Amazon, yeah, it's right at the top of this range, testing the old highs. And yeah, maybe it just goes back into the range as well, which is going to be perfectly fine, because the first attempts for a breakout usually fail, and this is the weekly chart for it. So it might just retrace back to around the 38.2% retracement, which comes around the 163 165 dollars per share level, roughly speaking. So that remains a possibility. Yeah, the week hasn't closed yet, so I need to wait a little bit. Okay, and then let's take a look at Shopify. This is also e-commerce related. Yeah, so the Shopify came out with its earnings, and I don't know exactly what the earnings were, but didn't look to be too bad. But this is not what the market was thinking, and we had a big third down right into this trend line which we had drawn. So the pattern that we were really watching was this in blue color here. That failed, but the trend line seems to be holding for the week isn't complete yet, but the previous week it was like a small body candle. The important thing as a side is there wasn't an increase in the selling pressure, so that's interesting. And then if we go back and take a look at this on the daily chart, um, I was trying to work out whether we have this ABCD formation here. There is possibility of one, and oops, not this one, this one. No, in fact, it went below that, but it is holding this this retracement level. Let me draw this. Uh, Yep, 78.6% of these lows around here. I believe that's the reason why the price has kind of held for these many days around here. So, yeah, I mean, it's just gonna be okay because of the trend line that we have seen in the weekly chart. If that trend line, is broken, then we might go and test these $45 per share level. But the price is really consolidating around the 78.6% retracement on the weekly chart. We have seen that nice trend line as well. Okay, now let's take a look at Meta. Here we go. So the Meta stock, big gap down when the earnings came out. Really nicely covered the gap in full. Um, yeah, there is a possibility that it could do an ABCD, which would just take it down to 325, which is 61.8% retracement of this move, which would be perfectly fine. And let's see what is the 38.2% retracement on the entire move. Yep, there we go. So if I do not know whether that will happen, but if it did, it would be not a bad thing, in my very honest opinion, because it would be just a 38.2% retracement, which is usually normally fine in bull markets. So there we go. And let's now take a look at NVIDIA. So the NVIDIA stock is pretty strong. We have discussed previously as well. Let's take a look at this on the weekly chart. Here we go. Yeah, so this stock, is likely to hit $1,000 per share level. That's a psychological level. So around 1,028 to 1,050 is a roughly shorter term target. A pretty strong and good looking chart here. Momentum is pretty strong. It just retraced right into 38.2% retracement. Nothing happened after that, no follow through, so that's good. Okay, now just thinking, let's take a look at Zscaler. So the Zscaler was a disappointment because we really thought that it was forming a nice cup and handle formation, and we had a very nice pattern completing, especially on the daily chart at 195. Let me actually show it to you, or I might have actually deleted that. No, I have not. So here 138 ABCD, 38.2% retracement, great looking pattern, failed. So this happens. This is why the risk management or using a stop is so important. Now the price is just consolidating right at this structural resistance turning support now. But one thing I would like to point out is this stock is weaker than the market because the S&P 500 and Nasdaq, they are making new highs, and this stock actually just got up to 61.8% retracement. So there is a lot of work that needs to be done for this stock, and this is why I was really hoping that if it finds its strength from 38.2% retracement, then that would be an indication that we could be an ABCD move higher to challenge these highs, and that would have been a pretty strong support. But it went into a deeper retracement. But look around here, there has been a fair amount of accumulation as well around here, and a nice kind of cup formation. So watching this one, but this stock is not really a favorite stock of mine just because the fact that it is weaker than the stock market. Okay, now let's also take a look at IBM. So this stock has also got quite a few things to do with artificial intelligence. A really big company. They also own Red Hat software, which is used to run enterprise servers. So a lot of companies running their websites or other softwares, etc. They really depend upon the Red Hat software. So they have quite a few things, and also a big research laboratory across the world. So that's great stuff. Now we have seen a pullback by this stock, and let's see what the pullback was up to. So let me actually take these lows because this was the recent start of a run. So it has done 38.2% retracement, and we can go a little bit lower as well, I think. So the actual low was around here in March of 2020. So it hasn't really retraced fully to the 38.2% retracement, but it is, let me draw a trend line to see how we might be doing in terms of trend line. Yeah, so maybe it's just consolidating around this level. Maybe there's a possibility it could move a little bit lower as well. But it's one of those old names which have done fantastic work for computing industry, and it formed a pretty nice bottom around here. We were thinking that it could actually get down a little bit further to about $80. That has not happened. This remains a big trading range though, but look at this move. It's just become a parabola and just pulled down a little bit. From a momentum perspective, the price is actually below the 20 period moving average, so that needs to improve. And this is like really long-term weekly charts, right? That could take quite a long time to establish. So we'll just also take a look at the daily charts, and then 200 period moving average price is above that, so that's good. Now if we just move down to the daily chart, what do we see? We see that the price is above 200-day moving average, and that's really important. And then we have the 20 period moving average coming down, and the price actually closed above that today, so that's a really positive note. Further, we see that we have this market symmetry concept coming. This is what the previous correction was, and if we just project it from that high, we see that this is where the price actually went perhaps a little bit lower, but this is where it is right now. So it has recovered a fair amount, so the momentum needs to improve as well. And if we just look at the dividends, then it also pays a really nice dividend as well. So yeah, keep this stock in your watch list, because it doesn't look it's a pretty good looking stock in my opinion. um, okay, now let's take a look at I'm just trying to think. Netflix. Oh wow. So Netflix stock on the daily chart has taken out these highs, which is good. And let's take a look at this on the weekly chart. Here we go. So the really important thing is that now it's challenging this 1.618, which would mean that now that it will become a contender to go and challenge these all-time highs coming back from 2021. So really interesting. There's pretty really good momentum behind this stock now. Price is above 20 weekly average, 20 period weekly average, and that which is about 200 weekly moving average. So longer term looks pretty good. So this 1.618, it capped it for quite some time, and now the chances are that it's looking that it goes for a breakout of that. So these highs will be the next point, the swing point that could get challenged, and moving above that, then we'll take a look at some of the other ABCDs, which will give us higher targets. So this one is also looking interesting now. Okay, and then let's take a look at Baba. So this is the Alibaba stock. I've done a video about this 4th of May, so it's a couple of weeks old now. And the price has actually risen above since we did the video about it. One thing about this stock is just look at this trend line here. It has broken above this. One thing that I'm really watching is that it has done a really nice rally before as well. So it really needs to break above this box, so that we can be more confident. The other thing is that this stock likes to do these kind of double bottoms around here. So this is going back, really going back in 2015. The stock floated sometime in 2014. It went below its the IPO price, which is kind of typical IPO cycle. Formed this double bottom and had a massive run higher. Now, um, what I'm reading about this stock is um, one of the things is that they are also really heavily focusing on the artificial intelligence, and they have actually developed their own bot similar to the chat gpt. So they are really working on generative AI, and with that kind of play in motion, that is catching the attention of a lot of investors. So that way this company is just not going to be only kind of a retail play, meaning that where suppliers are listing to get or factories are listing to find buyers who will place the orders, and then they go and deliver that. So manufacture products and deliver. It is also a company which is in the cloud business as well, and now they're getting into the artificial intelligence. So that could be another reason. What is happening is that the price is closing above the 20 period moving average, which is the 200 weekly moving average is a little bit lower, but these are weekly charts, so it takes quite a while for these to actually work through. And if we were to just take a look at this on the daily chart, we can see that the price is above the 200 week moving average is the red line, and now even the 20 period moving average is closing above the 200 period moving average, so which is actually constructive from a momentum perspective. And the stock is also paying a dividend of $1.64, so that is also interesting. So Baba was not paying a dividend before, but it has started to pay a dividend um, since December of 2023. So yeah, it's returning some money to shareholders in dividends as well. So that's pretty interesting. While we are on it, let's just have a real quick look at the FXI, which is the Chinese stocks ETF, because there are a number of stocks. I've actually covered this in a video done on the weekend, so I'm not going to go into the details of it. But here, the Chinese stocks based on this ETF, for example, and these are not just entirely Chinese stocks, these are also Hong Kong listed companies as well. Um, so when I say China, it's just also the Hong Kong listings, just not the mainland. Um, so look at this. It just went and pretty much touched the bottoms of back in 2008 and '09 levels. Now it's rallying, but it has a rally before as well. So we are just looking at for a break of this bearish symmetry concept. So something is happening in the Chinese stocks. Maybe so the Baba stock, for example, could also benefit through that as part of the broader markets improving, for example. Just trying to think of any other tech stock that we normally like to take a look at. Let's take a look at the Symbiotic. We have not had a chance to look at this for quite some time. Here we go. And yeah, so the Symbiotic stock, this is AI related, but robotics. They kind of build artificial intelligence with regards to robots, which could help in manufacturing the kind of things that Amazon might use in their warehouses, for example. So here what we see is just a consolidation going on for a long time. This one-to-one price projection ABCD, which could in fact see the stock go as high as 85, still intact because this point C is not broken. And then with this smaller red ABCD is also still intact. And because, let me actually put it like this is where the price is holding, but it's just gone into a fair amount of consolidation. It's just not able to break above it. So yeah, I think it might just take more time for the stock, and then it forms a higher base and then begins to move. However, if it closes below the 29 or this $30 per share level, then this pattern would be broken. But the stock has gone sideways for a pretty long time. But it's an interesting stock to take a look at. Just trying to think. Yes, Roblox. Okay, so Roblox. This is the weekly chart. Here, one thing is that look, it's just gone through a lot of consolidation, but it has also been a stock which has disappointed us for quite a while, because every time we look for a point C for a possible ABCD higher, the point C gets broken. So now, yeah, it really needs to get above the 54. There's a lot of resistance from here, then here, to possibly then get into the 67 range, which will be 38.2% retracement. But this is where I get reminded of the Wyckoff spring concept, where there's a lot of accumulation taking place. Maybe there is more time that this will take, and then we might eventually see a break and hopefully to the upside. Yeah, it could also move lower as well, but so far um, it's just kind of finding a base around $25 per share level. So thank you very much for watching the video. Apologies, a little bit longer video than what I was anticipating, but we had to cover a lot of things, a lot of stocks to take a look at, because this video is being done on a weekly basis, so we just get to talk about these tech stocks um, once a week. So hopefully you will not mind the long video. Thank you very much for watching, and if you like our analysis, please um, subscribe to the channel, and if you found this video of educational value, give it a thumbs up. Thank you very much. Good luck, good trading, and speak soon.